GameStop was the original meme stock. Swarm traders on the internet got the notion that it was being shorted by hedge funds, and so they started buying it to try to force the hedge funds to cover at a loss. Let's talk about GameStop and other meme stocks. We have Grant White joining us of Endeavour Wealth Management. Grant, thanks very much for coming on the show.
Hey, my pleasure, Andy.
I mean, just remind us, is GameStop even a real company?
Yeah, it's kind of interesting. I mean, this is a company actually that we used to own in the portfolio for a brief time, and actually leading into the original meme stock frenzy. And then when it went stratospheric, I should say, we ended up selling out of the position just because it was off the charts. We don't see a good long-term strategy here. So from that perspective, we have a really tough time. It's a real company, I guess, to answer your question, but it's not a company that we is investable at this time, no.
Yeah, I guess, I mean, they do have revenue, but the growth is in question. The BlackBerry, of course, became a so-called meme stock, and AMC, the movie theater company. So the meme stock era, the swarm trading, it was entertaining, and it was a new phenomenon in the market.
You know, I find the whole thing interesting. I find it a bit of a sign of the times because, I mean, there has been this democratization of access to markets over the last number of years, or over the last decade or so, and so this is kind of a symptom of that for sure. And on some level, I actually think, whether it's entertaining or, you know, it actually on some level might even be a good thing for investors because it's engaged them. However, I think it needs to be put in its proper place. I think it's you know, highly speculative investing. I mean, it's closer to gambling than it is investing, and so I think that, you know, everybody needs to put it in its right place, and not everybody's roaring kitty out there, that's for sure.